Welcome everyone. I'm Robert Green, CPA and Managing Member of Green NFH LLC and CEO of GreenTraderTax.com. I'm joined by my partner, Darren Neuschwander, CPA and Co-Managing Member of Green NFH LLC, as well as Johnny Paget, Tradelog accountant for our company. He heads up that practice area, which is booming for us now, unfortunately for most people, because they need our help. We didn't ask for it. The IRS is responsible, but you need help, and we have it. And we're also joined by Christy Cam, CPA, who is an accountant in our investment management division, who is now also working with Tradelog accounting for our trader clients to help out, because we have a lot of new business. Today, Johnny Paget is going to give us a demonstration of some of the great things that we do here at Green Trader Tax with your Tradelog files. They are, unfortunately, difficult to reconcile with broker-provided 1099-Bs. We've had a lot of information out there about that as a result of the new cost basis reporting rules from the IRS, which are mandatory for implementation this tax year, 2011. Brokers are not reporting the way they did last year for 2010. They're beefed up 1099s with all sorts of new information. Some is quote-unquote covered, non-covered, provided, not provided, other. They are dissecting all your data, putting tags on it, re-aggregating it, sending it to you, and you're supposed to do something with it on a Form 8949. It's really overreach in terms of compliance, in my personal view. And when you download your data into Tradelog, Tradelog gets it right. It looks at the raw data. But unfortunately, you also need to reconcile with all that tagged data, all those covered positions, non-covered positions, reported, non-reported. And Tradelog helps you do that too. In the software, it assumes what is covered and non-covered, and you can also train it further for what your broker may be doing to depart from the standards. And Tradelog asks you to put in the 1099-B information, total proceeds, total cost, and Tradelog tries to reconcile with it. And we're noticing large unreconciled differences on many files, attributable to either errors on the 1099, like very botched wash sales, where the brokers report potential wash sales rather than actual wash sales the way they should. Tradelog knows what the wash sales are, but there are many other differences that are, I think, attributable to these tagging categories. So there are some differences that are acceptable, others that aren't, but you need to investigate, get corrections where possible, and explain it properly. And Darren Neuschwander, my partner, why don't you jump in here and tell us your view of all this, and then you can introduce Johnny for the presentation, and I'll turn over the screen.
Thanks, Bob. Glad to be a part of the presentation today. This year, with preparing tax returns, is probably a very difficult year for an active trader, probably the most difficult that we've seen in many years because of all the issues that we're having with the 1099s. If you're an active trader, you need a software program like Tradelog in order to calculate your wash sales properly, and if you're using mark-to-market accounting. In the past, we've had some small reconciliation issues with the 1099s, mainly having to do with proceeds, because that's all the brokers have had to report in the past, and we've been able to reconcile those differences. But with the new reporting that the IRS has mandated that brokers start providing taxpayers, whether you're an investor or a trader, it's become a lot more complicated because the information that the brokers are providing doesn't necessarily reconcile to what we're importing into Tradelog. And it's creating a very complex tax preparation season, and it's one that we're recommending clients file extensions for Even if you've never filed an extension before in the past, if you have a Schedule D and an 8949, we feel it's best practice that you strongly consider filing an extension this year, because we do anticipate some corrected 1099s to be issued to try to reconcile this problem. I think it's most important at this time to really just get the presentation in the direction of showing some of these issues that we're seeing, and the person that's best for that is John Pageant. John works directly with Tradelog for our clients. He does the Tradelog accounting, does an excellent job, has been part of the firm for many years now. We really rely on him very heavily because this is an important part of your tax preparation process. So, John, I know you've got some presentations to do. Show us some examples. I'm going to turn it over to you.
All right, thank you. Darren, I appreciate it, you and Bob both. And also we have Christy on the line as well. As they've discussed, this year it is dramatically different. As some of you may have already received, obviously most of you have received your 1099s, but unbelievably some of you may not have received your 1099 by this point due to the confusion with the brokers and trying to implement the new regulations. The new 1099 format is going to give you the same, they're going to make adjustments for cost basis this year. And in doing so, they're going to give that whether you're mark-to-market or cash basis. They're going to give the same 1099 to either one. So it's going to affect everyone in the fact that you all are getting new 1099s. A copy of that 1099, of course, is given to the IRS, whether you're mark-to-market or cash basis. Also, if you are cash basis, you'll have a new form 8949, to deal with. The purpose of that is to allow you to reconcile your tax return detail with the 1099. However, the problem is that the 1099 that are being produced this year are by definition incomplete, because they're not required to give you all of the information, which is a portion of the information. That doesn't count. There may be errors or inconsistencies that also come into play. As a matter of fact, the 8949 even has a dedicated column on it to reconcile those differences. The IRS recognized there would be differences, and they went ahead and provided for that. So now more than ever, what people are going to be doing is you really need Tradelog this year more than ever. Some of the key points we want to get across today is that it's to your benefit to file an extension this year more than ever. When you do file, you need to provide line-by-line detail, and Tradelog is the best solution. As you make your extension, you need to pay the estimated tax. It's not an extension to pay your taxes, but it's an extension to file your taxes. So you need to pay your estimated tax liability with your extension and use the most conservative estimates that you have. Let's talk about some of the changes this year. Congress requires the new 1099s from brokers, but it's not in a standard format. That means that every broker can come up with their interpretation of how to implement this. Again, that's going to create confusion not only for the taxpayer but for the IRS. We've already talked about there's a new Form 8949 required to be filed by cash basis taxpayers. And that's purpose of that is to reconcile to the new 1099s. Now, what Bob, I think, is going to talk about later is the fact that if you're mark-to-market, that Form 8949 is not required. So that's another advantage of being mark-to-market besides the insurance, the tax loss insurance.
Johnny, we covered some of the basics in the prior webinar, so I'd rather you got into the meat and potatoes of the showing the forms in the Tradelog files.
Okay. All right, well, let me skip ahead then. Taxpayers, of course, let me go through this quickly. Taxpayers are still required to report all the activity, whether or not it's reported on 1099, and that's some of the things that we're dealing with. In the past, they're only providing one number. It's a gross proceeds total, so it's easy to reconcile. This year, the broker is required to report the cost basis as well as the gross proceeds, but again, only for certain positions. Again, they're matching. They now have to match trades and report wash sales on the 1099, even if you're mark to market. Let's talk about some of the issues. Taxpayers, again, have to do wash sales for substantially identical positions. These are some of the things I'm about to show as examples. They don't have, the broker does not have to do this, and the broker is not doing it including options, which options have to be included. Taxpayers have to calculate wash sales across all accounts. Well, the brokers don't even have the ability to do that because they only see their own account. Different brokers interpret the rules differently and therefore make various adjustments. Many brokers are reporting potential wash sales and not actual on their 1099s. Again, the broker is required to report the cost basis only for certain transactions and not others. For instance, if you purchased the equity prior to the start of 2011, the broker is not required to report the cost basis for that item. So your 1099 will be incomplete as a result of that. That will account for some of the differences. And then some transactions, such as options, are not reported at all in the 1099. But again, the taxpayer is, of course, required to do this. So let's look at some of the situations that clients are running into. Here is one of my clients that has been blocked out. You can see this is his 1099, page 1. You can see here the summary, gross proceeds. He obviously traded a lot, $923 million is gross proceeds, a lot of turnover on his trades. Now let's look at...
Johnny, which broker is this with, or which clearing firm?
This is actually Fidelity.
Okay.
Okay. In this case, it's Fidelity. And what we're doing here is showing now, skip down to the bottom, you can see this obviously, this is a very active trader. He's got 1,000 pages worth of activity on his 1099. But here at the total page, we have short-term totals, gains of $6 million. I'll just be ballparking the numbers here. Losses of $49 million, disallowed losses of $46 million. Okay, we're going to come back to that in just a second. I'm just trying to give you an idea. He obviously did not have $46 million worth of disallowed losses, but yet that's what they're reporting both to the taxpayer and to the IRS. Okay, so let's talk about how we use Tradelog.
Johnny, could you go back to that 1099 for a second?
Uh-huh.
What I think a lot of people are confused about are those legends up top, the P, the N, the Z. They have different legend symbols. What do all those mean? That confuses a lot of taxpayers.
Right. The P...
And Darren, you can jump in at any point, too.
Right. You'll see they have a legend here, and each broker is doing this differently. So this is not consistent by broker. This is independent for each different broker. Now, they should give an explanation, as you can see they do here. For instance, in this section, the section that we're looking at here is the very end of the long-term portion, and then you see the summary of the short-term and the long-term. And because it's the long-term portion, they have a P there. P, if you'll see, the following pieces of information are not reported to the IRS. They're not provided. In other words, those are the uncovered. They're giving you, in this case, the cost basis for your benefit to try to help you, but they're not reporting this to the IRS. That's what that's saying. They're not reporting that to the IRS. So again,
and that's because if it's long-term, it had to be something you bought before 2011, and they're only reporting 2011.
That's correct.
But Fidelity might also report 010 voluntarily, so maybe this was an 09 position.
That's correct. And there's going to be, if they don't have, for instance, if it was a transfer and they don't have the information, there'll be a similar notation that they don't, or they'll just leave it blank. And every broker is different in the way they're handling this. Some will include it, some will not. Some will include it in their totals. Some will not include it in their totals. And that's part of the difficulty in reconciling the accounts with Tradelog.
Because Tradelog, isn't Tradelog assuming what they're going to do based on the rules? But if a broker voluntarily does something a little differently, Tradelog has to figure that out. You have to help Tradelog. Is that right, Johnny?
That's correct. If you'll notice, when we go into Tradelog, let me show you a Tradelog screen here. When you do your 1090, after you've imported all your trades and you reconciled to the year-end balances, you will try to reconcile to your 1099-B. Tradelog has tried every possible way, and they've done a great job of getting you to make these adjustments so that you can try to reconcile to the 1099. It's not always possible in its current form because in some cases there's just errors that can't be automatically done this way. But if you'll notice here, we took the $923 million, that are gross proceeds that I mentioned previously, and then we have the $965,000 of cost basis. Okay, that's from our short-term cost basis. That's how we enter in what is from our 1099. That's the kind of information that the IRS is going to enter into their computer. So we need to try to match that with our 1099 detail.
And Johnny, it's important to note that Tradelog is just having you enter the totals, not the line by line and all those codes.
That's correct.
So there might be some differences with all those line by line. There's no way to download a 1099-B. These brokers have chopped and diced and chopped and sliced, all the information into all these legends, some based on the law, some based on voluntary going a step further, and some by misapplying the law. And we don't have any way to download what they did. And then we can only reconcile with the totals, and yet then we can get lost in the woods trying to find those differences. Isn't that what this is about, Darren?
That's correct, Bob.
Okay.
Yes, Bob, I'm sorry, yes.
Yeah, Darren, you jump in here any time you want to on some of these codes and different things, but go ahead, Johnny.
Okay. So after we've downloaded into Tradelog, Tradelog allows us then, we enter those sum total numbers, as Bob mentioned. You have to enter the detail. We've downloaded all the detail. So Tradelog's doing most of the heavy lifting for us, all the work. Now there is still adjustments that need to be made to Tradelog to get it correct, and we'll go over that a little bit later. But once you get the data imported, Tradelog will produce a Form 8949 for you. And this is something that is great that Tradelog's been able to do. They were on the forefront of this. And then what they're also doing, as you can see in this particular case, that they have made an adjustment. This is the account that has $935 million of gross proceeds. The 1099 is showing a $948 million total cost basis. But Tradelog has had to make an adjustment for $16 million to get that corrected. We have done independent. This is a client that I've already finished and worked through, and we know that this number, 3.4 million, is the correct number. We've done that based on several cross-checks that we've done both with the client and various methods so that we know that this number is correct, and Tradelog has it right. Wash sale deferrals are only $18,000 for this client, but on the client's 1099, wash sales is a huge amount, and I think I've got a slide of that in a little bit. But so let's go on. So wash sales, here's the actual wash sales that Tradelog produced for this particular account. $18,000, it gives you the actual detail. It'll show you which stock, which equity it applies to, and there's further detail behind that to show the actual trade and how it comes up with that. As Bob mentioned, one of the things that the brokers are doing and the way that Congress set this up is they're showing the potential wash sales. When you close a position at a loss and buy it back within 30 days, either before or after that, it's a potential wash sale. But if you do that in the middle of the year, and then there's various ways you can get rid of that wash sale, whether you wait 31 days and not buy it back after selling all of that position, or you end up having a gain that eats up that wash sale, then you can get out of that wash sale position. But the brokers aren't doing that on the 1099, so it's creating a lot of confusion.
And wash sales is a big area where we're finding differences, Johnny. And that we know that the brokers are reporting it wrong. And we also know that they lost track of the 010 wash sales because they didn't carry them forward to 011 basis. If you only report a 2011 stock purchase, what about the deferred wash sale from the prior year that you added to the basis? They left that out too. And we know they only use the identical position. So we know with confidence that Tradelog is right on wash sales and the brokers are wrong. And, you know, you see a client with $3 million of profit, you figure they're absorbing any prior wash sales. They're really only going to have a few wash sales at year end, especially if they tell us they were profitable at year end. So go on, Johnny. Show them how you use your good accountant training. And this is why it's unfair to make taxpayers be accountants. Even the brokers didn't get it right as accountants. They had software guys doing this. You're not supposed to net proceeds against cost basis and vice versa. Accountants never do that. There's an audit trail. You adjust the right thing. So now show them where the gold is, Johnny, how you put that good nose into it.
Well, and here's an example. In this particular case, after doing the Tradelog reconciliation, normally in the past, we would always be able to get this number down to 0. We would be able to get the adjusted Tradelog gross proceeds number down to equal exactly what is on the 1099-B. In this particular case, with the current status of it, you can see we're a little bit off. We're $12 million off, yet despite that, we know that the Tradelog is correct. We're trying, however, to reconcile it to a wrong number. That number is just wrong.
Now, Johnny, let me stop you for a second. In the past, show them that option sales. We know that options are not reportable until 2013. So we always knew that, well, your 1099 would be 930 million, whatever the number was. And if you traded options, Tradelog is going to have a higher number. And we knew as tax preparers, when Darren reviewed a return, he knew these proceeds are higher than the 1099, and there are options, so we don't expect to get a tax notice. Now, we don't know how the IRS is going to do the computers this year, and Darren's working on this issue, and he's hopefully going to have some news for us soon. I think he's lining up meetings and everything with his industry group, and we have our petition too, but we don't want the IRS to send notices to try to reconcile things to the penny. We want them to do what they did in the past, that, hey, this return is in the ballpark and it makes sense. Now, Johnny, you used to reconcile proceeds to the penny, and this year it's not, and I think it's because brokers are adjusting proceeds for wash sales when they shouldn't. That's one reason. What else are the reasons?
Yeah, that's one of the reasons. Some of the reasons are there's just errors, like you mentioned. They're adjusting gross proceeds when there's when they shouldn't be for wash sales. I mean, there's just various numbers of errors, and it's impossible for us in some cases to even reconcile because we don't know the formula that caused the error in the first place.
Now, short sales too, Johnny, because in the past, short sales were on the 1099, open short sales were on the 1099, and we could reconcile to them, especially with mark-to-market. But this year, the rule is different, and it's not in there. So that's a minor issue for some people as well. But continue, John.
Right. Yeah. And so it's just pointing out that in this particular case, here's an example where we know that Tradelog is correct, but independent verification, and yet it's going to have to report a $12 million difference. So let's look at how...
Now, what about long-term versus short-term, Johnny? Did Tradelog make that change? I know Deborah King was involved with that. You said that client had long-term on the 1099.
Yes. Let's see. I don't have a copy of that on this particular client. I tried to make sure I didn't want to show the actual 1099s to protect the client.
Oh, okay. So it was a different file.
What I have screenshots of, unfortunately.
Oh, okay.
So I wanted to make sure that I didn't, reveal any of their information. But yes, as you can see in this case, the adjustments that are going to be made if we filed it as is, that's why we've told this client in particular that he needs to do an extension. Hopefully we can get some correction from the 1090 from Fidelity to get this, bring this number, this 39 million adjustment, which is on this particular account, you can see the actual gain or loss. And this is just the short-term portion. I didn't capture the long-term, which is below, but it's fairly insignificant compared to this amount. And it's the $3 million. We know that number is right. But we've got to make an adjustment, and Tradelog is helping us do that, and it will look right to the IRS computers because we've made this adjustment, this $39 million adjustment, which we believe is accurate. But what really needs to happen is the broker in this case needs to get that $39 million down to a very small number, and that's what we're hoping to do when we get the adjusted 1099.
Well, let's stop here for a second, Johnny. This is a key thing, all right? Darren, what does this line, column G, mean when it says adjustment? I know 8949 has the adjustment from Tradelog, which is really a plug number. It's plugging the gap. We know Tradelog is right. We have very good reason to suspect the broker is wrong. There's a large difference. Some we understand why, some we don't. Some we want to put back to the broker to request a corrected 1099, and we need to wait for that, and that's why we have to file an extension. But when the IRS, I know you wouldn't let this return go through our office to be filed yet, Darren, because it's got $39 million in that adjustment. What does that mean in column G, Darren? And tell us about what you think about all this.
Well, go ahead, John.
Let me just real quick, and then Darren can add on. But the $39 million in this case, the vast majority of that is the potential wash sales that we talked about, Bob.
Right, that's right.
The vast majority of it is potential wash sales, and then the other $12 million is still yet unidentified. That's the $12 million we talked about before.
So
majority of it
right,
is potential wash sales.
Right now, yeah, because we saw what we know that they said deferred wash sales was 46 million or whatever number it was, and we know it was 18,000. So we could have that difference on an attachment. But Darren, let's jump ahead 3 months. Let's say that there's minor IRS relief. They said, well, we're not going to send everybody a notice, just get in the ballpark. Hopefully we get that. And Fidelity said, listen, we're not changing our 1099 unless the IRS forces us to. And they say, we think we can do it this way because we're following one set of rules that is totally different from what you need as a taxpayer. The rules say we don't have to give you something to rely on for taxes. So what would we do, Darren? Do we have an attachment to this? And I'm asking you only because you're the head of tax production. I don't do this every day like you do. Do we have an attachment that says these are the known differences and explain it and lay it out for them?
We're either going to have a statement that explains these differences if the differences can be identified. If we have some differences that really just can't be identified because of the difference between what's downloaded and calculated within Tradelog compared to what the brokerage is, that's really where my concern is, some of the unexplained differences. And that's the reason why we're asking the IRS, what is their plan? Are they going to actually match information that's on the tax return, comparing it to what the broker reports on the 1099? Trying to get a feel from what they're looking at, and we feel confident that the information in Tradelog is fairly accurate compared to what we're getting from the broker, so we feel confident to use the Tradelog information, but still trying to reconcile that back to the 1099, as John's been trying to show, can be a challenge, and it can result in large differences like the one he's showing here. Some of the adjustments are valid, they're wash sales, some of them are not. And when we have such a large difference, we have concerns about that, reporting it and not necessarily having an explanation for it. So a footnote can be needed, but the footnote may basically say, we utilize Tradelog software. We feel confident that these calculations are right. They don't necessarily agree back to the broker information, but the broker reporting compared to what the taxpayer has reported, they're not even following the same set of rules. So we're following the rules that the taxpayer has to use to prepare his own tax return. So there's going to be some differences.
And we may provide a link to some of the known database of some of the differences and problems. And I know that we worked on preparing a footnote that Tradelog kind of suggest people to look at as well. So, but we're hoping that people don't get that into the system right now. You file an extension, we have a chance to narrow some of this and get more of an FAQ database of some of these known problems. And we're hoping brokers close the gap by correcting the 1099s.
That's right.
Johnny, I see you have another screen up here. So you want to continue, I guess. Go ahead.
Yeah, I just wanted to show another example on a smaller scale that maybe can relate to more different people. But and this is a different broker. This account was closed. This particular client closed the account in November and sold all their positions. So it's a very easy example of how, and it should be fairly easy. Obviously, they have no wash sales. They've sold everything, and they sold everything in November, didn't buy anything back in December or January. The 1099 shows a $500,000, approximately, I'm rounding numbers here, $500,000 loss, and the actual loss is approximately only $50,000, which is what Tradelog shows and is what the client agrees is correct. And they didn't even have $500,000 to lose in the account. So let's go through a couple of these, and I'll show you how that can be confusing to the client and the IRS. If you'll look again, here's the taxpayer's 1099. This is the summary page down at the bottom. Well, this is actually short terms. This is the summary of short term. Notice now the 1099 has to break it into short term and long term. And so they do that. This is page 134 of 196. You can see that the gross sales proceeds of the short-term trades is $3.7 million. And of course, that's not that they had, I guess everyone's aware of that. That's churning the same trade. That's not actually, obviously, the dollar amount that they had in the account. And then the cost basis is shown at $4.2 million, almost 4.3 if you round it up. All right, so now, then you have a very small amount that's long-term. Basically, you see the difference here is an additional long-term sales price is only $11,000 with a cost basis of $54,000. So a very small amount is added to that on the long-term portion. So then they have a total, and again, this $54,000. You see all these X's here, like you were talking about, Bob, before. That's their. This is Schwab, I believe. That's their way of using it. Instead of a P, where the other one was a P, they use an X. I mean, they're all different. Every broker's different how they report that.
You know, Johnny, that's crazy, because I know Darren said this should have been standardized. But go ahead.
Yeah, and that's one of the problems is that the IRS is going to be getting all of it. Not only is it confusing to the taxpayer, but IRS is the one that's going to be getting all these different forms of the Form 1099, and how are they going to input it into their computers?
Well, maybe that's a good thing.
Yeah, that's true. So anyway, the total amount is $3.7 million when you add the $11,000 to the gross proceeds above in the short term. Okay, so that's what we enter into when we go into Tradelog. We enter in the $3.7 million as our gross proceeds. We had to add together the short term and the long term, and then our cost basis. We just report the amount that is on the short term. Because that's all that's being here. If we had long-term, if that was reported, we would put it here. But
now, Johnny, let me stop you. You're still in the screen. You didn't show before the 1099B details on the right, which is very important to tell Tradelog what is happening, that, right, you know, what's reported, what's not. Like if you check ETFs, you're saying that those are going to be included. And in some cases, some ETFs are not. Only the registered investment companies, the RICs, are the securities ETFs, but then you got to individually back out the commodities ETFs. Maybe you should talk a little bit about that so we don't glance over that.
Yeah, and Tradelog gives us the ability to, it gets very challenging, as you can imagine, trying to figure that out. It just depends on how large the account is and how detailed it is. But yes, Tradelog does give you the ability to get that part of it. That's what would be, you know, more of a known reconciling item that you could do. And Tradelog will allow you to actually do that on individual positions to make sure that they're correctly going to reconcile when they do the 1099 reconciliation 8949. So yeah, that's a great feature of Tradelog that they have the ability to do that.
And this gets to them, Tradelog, trying to match up with what the broker is doing, because some brokers do it optionally and some don't. So
get back to what you said.
If there are differences, if you see differences on a file, that's probably the first thing you look at, right, Johnny, is Tradelog set up right to match the broker?
Right. Right. That's one of the first things you do is make sure that, that the broker and Tradelog are treating things the same.
Sorry to keep interrupting you, Johnny. You were showing the proceeds and the cost.
Yeah. So here's the actual account. When we run, after we run it, we run the 8949 form, and you'll see that the actual Tradelog calculated amount is the correct amount at $50,000 loss in this case. But again, we have a $438,000 adjustment in order to get that corrected. So it's just one of those things, like Darren said, we don't feel comfortable filing it this time, even though we know that these numbers are right. It's just very intimidating, frankly, to be filing a return with that kind of an adjustment. Again, you can see here, I didn't have the ability to get the whole screen, so I tried to scoot it in here, and you can see the 13 and the 36, I believe, gives us our $50,000 loss here, and with the short term and the long term. That's the great thing about Tradelog. It's giving you this 8949 form and this Schedule D so that you can plug those in. Darren's going to talk about how you use that to plug those in later, but you know, where that plugs into your return. But the Tradelog is giving you the accurate information to make that as easy as possible. And again, we have confidence in the Tradelog numbers. We don't have confidence in just the raw data. You can't use the raw data, the raw 1099 data, because by definition, it's incomplete. It's not even required to be the same thing as a taxpayer. So people need to understand that.
Well, Johnny, I'm sorry to interrupt again. We use the raw data of the downloads, the actual confirmations, the trades. Tradelog calculates the trades. The brokers took that raw data and sliced and diced it into all this stuff to generate a 1099-B under a whole different set of rules. So for us to have to then reconcile with that crazy accounting that they did is on a wild goose chase that has nothing to do with the raw data that Tradelog downloads and does correctly for a tax return.
That's correct. And here's just a brief example of that. It flows right into this. Here's in this particular smaller account, here's the actual trades. Here's the sales. This is a summary of each ticker symbol. And, of course, Tradelog has all the detail behind that, but I just produced this summary report to give you an overview. I don't know if it's as big as I could get it and get the whole screen on here, but in case you can't read that, that's ANF, and that's the symbol I'm going to highlight here. And it shows a sales price. I know you may not be able to read that, but I believe it's $208,000 of your sales price for all the ANF transactions, and the cost basis, as calculated by Tradelog, is $218,000. That's correct. I've matched those directly to every single trade that was made, and we know that that $218,000 is the correct number. Okay. Here's the actual trades. As I said, Tradelog downloads each and every trade, and so for this ANF, where they were opened, where they were closed, you can see the trade price, the amount, the commission, everything is included. So you know the actual gain or loss on this match trade. It matches the trades up correctly. So that's how Tradelog, we know, is getting the correct data, because we can verify every one of these trades and know that that is the correct amount based on the trade confirmations within that account. The 1099 is not that. It's a, like you say, it's sliced and diced numbers. If you look at, again, this is just that one account, so it's easier to read. The $208,000 and the $218,000 for just the ANF. Okay. Now here is the same ANF, Abercrombie and Fitch, 208. That matches on this particular case. That matches. However, we're way off on the cost basis, and it can't be explained easily by some of the known reasons that that we've discussed before. So again, some issue in their formula that's causing these numbers don't match anywhere. On you look for this 11,742 or this 40,594. These detail, they aren't on the trade confirmations. They are numbers that have been manipulated to produce this 1099. They add up to 237,000, which is not the correct number.
And it's no like combination of lots or anything. You used your accountant sense. That's what accountants do. If you're a good accountant, you know it early on in school. We all have studied math. You either know how to find differences or you don't in numbers. That's what accountants do. And we're stumped on this in a lot of cases. And that's very scary to all of us, right, Darren? I mean, it's kind of doesn't make any sense. There's not corporate actions involved here. I mean, what could it be?
Yeah, the unknown is what concerns us the most.
Yeah, and the supplemental data, and it looks like I may not have had time to get that into the presentation here.
And Johnny, you said this is a Schwab 1099?
Yes, sir. This is a
Okay.
Schwab. They actually provided, and I meant to get a copy of this but didn't have a chance to, they actually at the end of this report, towards the very bottom of the page, they have supplemental data. And I wish I had a copy of it, but the actual supplemental data shows what they think the actual realized gain or losses are. So it's not being reported to the IRS, but it's reported to the consumer, to the taxpayer, and it's going to be very misleading because in this particular case, they are going to get a supplemental data saying that the realized gain and loss is a $500,000 loss.
All right, stop right here, Johnny. This is key. A lot of people, investors and traders, and I hope the whole country listens to this webinar today, and the IRS and the media, because you're showing them this is the smoking gun right here. And now, so this is the key punchline. Some people get a realized gain or loss report as supplemental information. And they think, oh, the broker did me a favor. They gave me the accounting. Now, we know 1099-Bs are sliced and diced and wrong. And this realized gain or loss report that Schwab gave, Johnny, is it based to match the 1099-B, or is it matching what a Tradelog would do? I thought I heard you just say it's matching the errors in the 1099-B. Is it, Johnny?
I'm sorry, Bob. I was looking for an example of that. But yeah, so I didn't.
So the realized gain or loss report is matching the errors that we see right here on the 1099-B. It's perpetuating the error, and taxpayers are going to unwittingly use it on their tax return and way overpay their taxes. And that's what upsets me the most about this whole issue. The IRS wanted to close the tax gap, and in doing so, with the botched implementation, all the brokers seem to be overstating wash sales in outrageous ways, which means that taxpayers are going to overstate their taxable income. And this is no way to close the tax gap by all of a sudden raising all this new revenue based on phony wash sales. That's just can't stand. That can't be allowed to stand. But continue, John. I just wanted to editorialize a little bit there because that's the most upsetting thing about this whole issue is not just the wrong 1099-B, but a broker saying, we're going to do you a favor and give you the accounting that you need, instead of just insisting that they use a third-party module like Tradelog. And when you call these brokers, they have the nerve to say that, yeah, they're doing some corrections, but they're not fessing up to this problem. And I've worked with the media. Darren and I have done several interviews, and there's been some great coverage in the media. But I haven't seen a writer yet who's had the confidence to say the brokers are botching this and they need to fess up. It's very hard to do that. These brokers advertise in every one of these medias. I don't need to go through the names. We got to get this message out. These 1099-Bs are wrong. The realized gain or loss reports are wrong. Taxpayers are overpaying their taxes, and it's not right. But continue, Johnny.
Okay, yeah, here's what I was trying to show you. I was able to find it. In this particular account, you can see there's supplemental data. One of the last pages of the report that you get from the broker is showing total short-term realized gain or loss. They're showing a $526,000 loss that the consumer thinks, wow, that can't be right, but that's what they're reporting. They know it's not right.
Well, in this case, they would get the benefit if they reported, although there'd be a capital loss limitation. But it's usually the other way.
Yeah, but this is just an example of how wrong it can be. And yet this is what they're reporting both to this doesn't go to the IRS, but this is what the consumer is going to think is correct. They look at those numbers and they go, wow. Now, some people will recognize if it's not as big of a difference. It's just so confusing. But they're showing a $570,000 loss when we've already shown the actual loss based on Tradelog and based on real economic data was a $50,000 loss.
Now, Johnny, I want you to stop for a second and Darren to come in here, because I know Darren was involved with some other industry professionals, and he's trying to get our message out. And some other CPAs said, well, that's not my problem. If a 1099-B shows this, I'm just going to sign the return, and I'm not at risk. And I think that accountants are going to be doing malpractice if they just rely on something that is wrong. And we don't want clients getting huge refunds based on incorrect data, because we think a corrected 1099 will eventually come, and then they're going to get a tax bill to pay it all back with interest and maybe even a penalty. And it's just a lot of trouble. Darren, what do you feel how CPAs need to act about all this?
Well, hopefully they're aware of the overall issue. Our firm is very aware of it because of the fact of what we deal in. But if you have been using a CPA that's, maybe they're just not up on what's going on. Unfortunately, all of this is occurring during the middle of tax season, so everybody's dug deep in trying to get tax returns done. But if you're not paying attention to what's actually going on, you can actually miss this. And it's a big problem. I mean, CPAs, we're getting third-party documentation. We get W-2s and from employers, and we're not required to validate to make sure the numbers on the W-2 are accurate. And some CPAs feel the same thing about the 1099s that are coming from the broker. This is a 1099 that the broker issues. It's given to the IRS. I should be good to use this on the tax return. In the past, there's been some truth to that, but this year there's a big stop sign in front of you. If you do that and don't actually verify the data, you could be filing a tax return that doesn't have accurate information, and the client is relying on the CPA to at least do some due diligence to make sure that the information is correct. And I have concerns that there will be some returns that are going to have to be amended once some of these corrected 1099s get issued. So just be cautious of it. If you're self-preparing your return using another CPA and you've got some issues that you're seeing, just be aware that the data that you have on the brokerage information may not be accurate this year.
Yeah, because a lot of CPAs will just attach these realized gain or loss reports with a Form 8453. And
if you do that, and as Johnny showed you, I mean, one of the examples, the deferred wash sale was just huge, and it was a total wash sale. And if you actually put that on in a summary standpoint on the 8949, the overall calculation is really not going to be accurate, and you potentially could dramatically overstate your income for the year. So be very cautious. Using some of these total numbers will get you into some major trouble this year with trying to file an accurate tax return.
Well, I almost feel, Darren, to file before April 15th before resolving all these issues. I don't want to use a term, but it's almost like malpractice. I mean, people have to take pause, hit the reset button here, and I really hope that CPAs out there are listening up as well. And think of all the tax preparers who are not CPAs, who are not even, passing muster with the IRS, who, we get reports from people who go into these tax storefronts. One guy yesterday said, well, I'm in this tax storefront, and the guy wants to charge me $7 per trade to do a couple of thousand trades for Forex. This was H&R Block. I said, get up and walk out. It's summary reporting. You don't even have to do any line-by-line reporting. So, I mean, the level of people who don't know their stuff are really going to be caught with their pants down this year. Well, that's a bad term. They're going to really be exposed, even worse term, to their ignorance on all these issues. This is a year that take pause, file an extension, and get in touch with our content, get in touch with us. And here's the thing. Send your data file to Johnny Padgett. Let him take a look at it. Christy Cam will help him. Our other CPAs will work on it. It's not a year to just hit the button on Tradelog and file. A lot of years you could do that. This year, unfortunately, you got to compare it to the slicing and dicing lunacy that the brokers follow. Back to you, Johnny.
Okay, thanks, Bob. So the question is, we've established that we feel that Tradelog is more accurate, but can you just import the data into Tradelog and assume it's correct? And unfortunately, no, that's not the case. The initial import will get the bulk of your data into Tradelog correctly, but there are almost always adjustments that have to be made before it can give accurate results. You know, not counting the new 1099 errors that we've just described. Some of those typical adjustments are you've got to identify missing or duplicate trades from the download. These cannot be found without cross-checking against the valid 1099 data. Even if you get the, for instance, if you take an account that you know is reconciled to the year-end positions, if you bought and sold an equity during the middle of the year, then that's not going to affect your year-end position. So if you're missing that whole trade sequence, you won't know that unless you can verify that with the 1099 data, and that's the difficulty when you already have errors mixed in that you may or may not be able to identify. So that's just some of the issues. But you always do have to find those missing and duplicate trades, and they're not uncommon. That does happen quite often when you're downloading data. There's corrupted trade data that you can fix. You've got to find it and fix it. Adjusting for stock splits. If it's not adjusted correctly, then this can cause dramatic differences in your gain or loss. If you have a reverse stock split or a stock split for 1 for 5 or 5 for 1 or 10 to 1, it's going to make a dramatic difference if you don't get that corrected in your gain or loss, because that obviously changes the amount that you would be matching, and it can cause a lot of errors if you don't get that corrected. Adjusting for mergers and acquisitions, ticker name changes, these all have to be properly input into Tradelog so that you can properly match the trades. Options. Options need to be properly exercised, assigned, or expired. Tradelog can do that for you, but you have to. That's something that you have to do manually a lot of times, because the brokers don't do this automatically, and it's not able to automatically import. And it's not included on your 1099 at all, but of course taxpayers are required to file it. Also, there's adjustments for options on ETFs, if they should be treated as 1256 contracts, which I know Bob has talked about in some cases. We feel that that's appropriate too. So there's just a lot of things that you need to do. It's not just a simple download. Although Tradelog is a great program and does many things for you, there is some stuff that you have to do to get the data correct.
Well, Johnny, let me stop you here. There are some companies that, enterprise providers to the brokerage firms where they help with tax lot accounting, and they have, corporate masters. That's a big part of their service. They can spot the splits, the mergers, the income redistributions, which is a big part of 1099 corrections. Now, if you call the brokers, that's why they'll tell you they're making corrections for income distributions. What's a dividend? What's a capital gain? Tradelog doesn't do that. And that's a very big job to have a corporate master. But so that is a little extra work you need to do with Tradelog on your own. But I like that Tradelog is very independent from the brokers and not enterprise, because the enterprise providers are the ones that are generating these 1099-Bs. They're more in touch with the broker's needs, which are totally different from taxpayers' needs. So yes, this is a little extra work with Tradelog, but I don't know if traders run into splits and all these mergers and acquisitions that much. What do you think, Darren? And Tradelog's not doing your dividend accounting anyway.
We do see that to some degree, Bob, especially if traders have some investment accounts that they're segregating. So it does happen. John has a couple times every year that we have issues because of it.
Yeah, especially the investment accounts. So that is good for a very good reason to have Johnny look it over. But I wanted to point out to people about enterprise, broker systems versus Tradelog. But go ahead, Johnny.
Yeah, just kind of, I know we're running out of time here, so I wanted to wrap up and do a couple of things, and then allow whatever
We
time
can go
need.
a little. We'll go a little later, Johnny. I know Darren may have to jump at one point, but go ahead.
Yeah, the key points, as we mentioned before, it is, as you can see, it's definitely to your benefit to file an extension this year more than ever. When you do file, you're going to need line-by-line detail, and Tradelog, not your 1099, is the best solution for that.
Well, Johnny, if you finish the presentation of stuff, I'm going to grab it back now and wrap up a little bit with Darren on the extensions and all that. But you did a fantastic presentation. It was really good to see the 1099Bs and the Tradelog and to get the smoking gun. You showed the smoking gun. So we're on schedule here, Darren. So, Darren, what do you want to say to everybody about the extension and what they want to do for April 15th? And I can talk about the mark-to-market a little bit.
Well, as we've said throughout this entire presentation, we feel as a firm that you really need to file an extension this year if you have a Schedule D and an 8949. We do see the issues, the inconsistencies, the errors. Johnny has pointed them out in some of the brokers. We've seen it with brokers that have, or taxpayers that's had several thousand trades. We've seen it even with taxpayers that's only had 7 trades. So it's just not an active trader. It's just an individual that has an investment account. So file an extension. Now I get this question time and time again. Well, Darren, I have never filed an extension before. I'm concerned I'm going to get audited. No, it's an automatic extension. You have a greater chance of actually getting selected for audit if you file on time with incorrect information than if you do requesting an automatic extension so that you can have more time to actually gather the correct information and file your tax return by the extended due date of October 15th. What the IRS actually uses to match up information on a tax return is if a broker or anybody issues anything corrected, that's the information that they're going to use to match up on the tax return. If you file now and then a corrected 1099 is issued, well, you're going to have to amend your tax return, or otherwise you may get a notice because the IRS is matching up something to a corrected 1099 and you didn't take the time to file an amended return. How easier would it have been just to file an extension, pay in what tax liability that you may have owed by April 17th this year, wait 6 months, and let's see what the brokers actually do about filing corrected 1099s. Don't be afraid about filing an extension. The majority of the wealthy individuals that are in this country have always filed an extension. We highly suggest filing an extension just because, as a little saying goes, the early bird gets the worm. Well, that's not necessarily the case when it comes to audits. Usually the early bird that files are the ones that are selected for audit. And there's some fact behind that. So file the extensions this year. Bob's going to talk about the other important thing that you need to consider with filing the extension, and that's mark-to-market accounting.
Thank you so much, Darren. And I know you have some meetings, very important ones on this issue right now. So if you have to jump, people can, when they sign up with us for tax prep, they're going to work with you. You're going to get them assigned to one of our whole cadre of great CPAs that are all highly trained, and you review the returns. And that's comfort and peace of mind to me because I know that you're the best in the business, and I'm really happy to have you as my partner running tax preparation and production. So some people will sign up with us right away and get our help for the extension. Others are able to do their own extension and sign up with us afterwards. And, you know, they can work with Johnny Padgett and Christy Cam. We can't help everybody before April 15th, so do the best you can. Consult with me about it. That's really key because I can consult you on how to handle the extension and the mark-to-market accounting election. If you didn't attend our webinar yesterday with Tradelog, it's right here on our Tradelog landing page. So you can listen to it, and at the end I talked all about the mark-to-market, and I have in other sessions, and it's in the guide. I'm not going to do it fully today, just to say generally, that election is due by April 15th. That's the money issue. Get your trade log. See where you stand, because if you have a large capital loss carryover and you elect mark-to-market on securities, you won't be able to use up your capital loss carryover against those mark-to-market Section 475 gains. So what you need to do is come back to our website. Always start in the Trader Tax Center here and go to the mark-to-market page. Read about mark-to-market right here, the election procedures and why it's good. And then you need the guide. You need Green's 2012 Trader Tax Guide. There's a whole chapter on all the different decision-making points. You need to read that chapter to see if you should elect mark-to-market. And if you need to elect it, then you simply attach the election statement to your extension that you paper file. If you e-file your extension, you can't make the MTM election with the e-filed extension. No big deal. You just mail it, and that election will be made. Now, if you want that extension to be valid, you need to pay 90% of the taxes. Otherwise, the IRS could hit you with late filing penalties. We have a lot of information all about that on our blogs. If you go back a few of the cost basis blogs, there's a whole area about filing the extension and the MTM election. So get with me and discuss it. I have openings between now and the 15th. Have a consultation. Let's talk about where you stand on your trade accounting, whether you had trader tax status for 2011 or not, whether you have capital loss carryovers, what you should do in 2012. Are you qualifying for trader tax status? Should you elect mark-to-market? Here's one example where you should elect it. You have a large wash sale from the prior year. You have a loss in Q1. If you elect mark-to-market, all of that is converted into an ordinary loss, as well as any open positions, business positions at year-end last year. That's money in your pocket. Could be tens of thousands of dollars in your pocket by making the election. Skipping the election can lose all that. Now, if you have capital loss carryovers, you can still do this, and then we can form an entity for a do-over on the election. The entity starts out with capital gains, so you can use up your capital loss carryover. You can have the best of both worlds, but you got to check in with me. You have to get educated on this. Don't spend the next few weeks trying to reconcile your 8949. The brokers won't take your calls. They're frozen. They're not going to issue something themselves. Why sweat the details when you know Tradelog is right? Focus on the extension and the important mark-to-market accounting election and maybe setting up an entity. So put your energies where the money issues are, not where this slice and dice cleanup accounting work is. Put it where the money is. So just to show you around the site a little bit more quickly, and this is important, I want to show you our petition. We're getting through. We've been writing the IRS, and I don't want to give out any news yet, but I think we're making headway, and Darren's involved with the industry group that's going to be talking to them. He's the key guy at the table. Darren and I are leading this in the industry. We're leading this for traders. And we have a petition. It's very important to sign this as we speak. Okay, we've been on this call now, and look at all these people that signed the petition while we've been on the call. Every few minutes, people are signing it and making comments. So just from our website, you read it. There's already 1,272 letters. We need 50,000. We have to let every congressman know this can't stand. Here's the smoking gun. Look at the webinar that we just did today. There it is. We had Fidelity. We had Schwab. We have this with every major broker. It's wide scale. This is not just talk. We have the smoking gun. They have to fix this, and we need your help in doing it. So what we want is in the petition. We want, and the petition's on the blog, we want the IRS not to match the returns. We want the IRS to reconcile the broker and taxpayer rules. This apples and oranges doesn't make any sense. We don't want tax notices. We don't want our clients getting tax notices. That's very upsetting. It could lead to audits. It could lead to a lot of aggravation, cost, headaches, and IRS trying to hit you with tax bills that aren't even due. And we want them to give us relief on these extensions if you're completely lost. And then we don't want them saying your extension isn't valid, you didn't pay enough. We want relief. We're going to get it. If our army of traders marches on Washington through our petition, we're going to win. We don't need high-priced lobbyists in Washington to peddle special influence and money passed around. We want to get this straight in the good old-fashioned way, rallying Congress through our petition. So please sign this petition today, pass it to everybody you know, come back to our site, go down here, get Tradelog, click over to Tradelog on our landing page, then get the program, and then when you need help, right here on the Tradelog page, Trade Accounting, get in with Johnny Padgett, Christy Cam, and our other CPAs on your data files to get it right. And then have the consultation with me. Just click on Consulting. Purchase that. It's $150 for the half hour. Mindy will get you in with me. I'm going to squeeze in as many people as I can before April 15th. You can get right on my schedule. Just call Mindy in customer support. And sign up for the tax prep. Sign up right away. Get in our system. We'll do your extension or you'll do your own, but get in the system so that you get the checklist, you get organized, you have access to us. And make the right decision about mark to market. Again, go over to the guides. Sorry to fly around here. And probably get one of these packages. Gold package is a top seller for all the guides, the book, the guides, the examples guides. So thank you all for coming. Thank you, Johnny Padgett. Thank you, Darren Neuschwander. Thank you, Christy Cam. Did any of you want to say anything as we wrap up? Well, so
Call an extension.
yeah, thank you, Darren. And Darren, good luck in your meetings with the IRS because the whole industry is counting on you. And there's no better accountant in the country than you to do it because I don't want to be a bull in the china shop. So I will play good cop, bad cop here. I'll be the bad cop. You be the good cop.
That sounds good, Bob. I appreciate the kind comments. And, yeah, when we go into the meetings, I mean, we have everybody's best interest involved, and hopefully we can go in very positive and address all the concerns and enlighten them because I just have a feeling that the IRS really doesn't understand what they have actually developed here and the mess that it's actually going to cause. So a little education from our part to them may actually go a long way.
And I know, Darren, you've been a little less hard on the brokers than I've been, saying, hey, they didn't even see this 8949, and these rules were sprung on them last minute. So I know you don't want to blame the brokers either.
Yeah, I was involved when the initial discussions came when the cost basis reporting was issued. And at that time, we didn't even envision the 8949 taking the Schedule D, the D1, basically turning that form into 6 different forms of the 8949. We didn't envision that, and that's really where the whole confusion has come into play this year because of that form. And just need to go back to the IRS and say, look, this isn't working. What can we do? We want to work with the brokers to try to get it right, but even still, we got to get some standard way that the brokers are reporting it to you, the IRS, in the same time so the taxpayer can actually go back to having some kind of reliance that the information they're getting from the broker is fairly reasonable. It's just unfortunate that this year, more than any that we've ever seen, that reliance just isn't there, and that's the overall concern.
Well, that's great, Darren, and thanks everyone for coming. Now, I am going to answer a few questions and go a little late here. Some of my panelists may have to jump. But we had some good questions on the board too, and a lot of people have been patient. So I'll answer a few of those key questions as well, and any of my panelists that want to stick around, you're very welcome to as well. But otherwise, Johnny Padgett, you did a great job today. And by the way, a lot of people on the board said so, Johnny. And I'm glad they have a chance to meet you because you're a high-quality person who's very well trained and very smart. And if they're going to have someone sniffing out their problems, they want you on the job. So that's good. And they're going to get to know Christy Cam better as well. And a lot of them know our other CPAs. So let's look at a few questions here and points. I'm going to try to get to some of the most telling ones. For some of your tax, general tax questions on Trader Tax, come to us in a consult or another forum on another day. Yeah, so John said, is it a red flag with a large adjustment? Yeah, we think it is. Hopefully after Darren works with the IRS, they're going to be soften up a little bit on it and expect it. It's going to be expected. That's what we want. And we don't want tax notices, but we don't want you to be the early bird that gets the audit now. How do you think the IRS figures out what's right or wrong? They audit. That's what taxpayer compliance audits are all about. And it's like, this is like a software company putting out a beta program that's got a huge number of problems, and then they rely on the customer to fix it with their headache. You don't want to be that guinea pig on the audit. So don't shoot until you see the whites of the eyes, until we give you the go. Don't file until we say file. Stay in touch with us on the content. A lot of people say they're going to follow up with us. That's great because we think you should. We're not trying to sell you anything. We're trying to get you out of this mess. And shouldn't only December losses be wash sales? Well, you would think that, NM, you might trigger wash sales all year long. It is possible that you just keep kicking the can down the road from one loss to the next, but it's unlikely. You probably broke the chain and didn't buy it back. You probably absorbed it with a gain. So, adding up every potential wash sale condition is flat out ridiculous. And I can't believe that's in the 1099B preparation rules. I think that is an error. And it's lazy slicing and dicing. It's funny. These brokers put a lot of effort into those ads on TV to get your business. They put a lot of effort into all the tools to get you to trade with. They put a lot of effort in giving you the green line to follow to get your retirement funds. Well, where's the effort in doing the accounting and the taxes right? That's not right. We don't work that way. If we get involved with something, all we think about first is quality control and doing the job that we promise. That's what CPAs do. They don't oversell. They don't overtake on. I'm a little upset about that. I don't think it's right that taxpayers are having this problem. It is wrong. Okay, Tracy, with individual taxpayers have to request corrections. Yeah, you do. We want our clients to formally request the corrections. Boy, those brokers are not going to like me. But I'm sorry. We have to do the right thing. We have to protect the tax interests of our clients. We feel that is our mission. We don't want them audited. If they do get a notice, a lot of you are going to get notices. Come to us. We will reply to that notice and try to squash it. And if you get audited, we'll try to get it reconsidered. All right. Jay, does the IRS really approve of not reporting wash sales? No, they insist. That's the law. You got to report your wash sales. Johnny got rid of that multi-million-dollar wash sale, and the real wash sale was $18,000. If you have, this is kind of funny, but I mean, if you have a large wash sale from last year and you elect mark to market, you're converting it into an ordinary loss. I hope, Darren, people don't use those phony 1099B numbers and then turn them into ordinary losses on January 1. That would be wrong. But you never know what some taxpayers do. Some taxpayers make convenient errors rather than purposeful errors. The IRS is going to have their hands full here. Bill, are you sure the P means not provided? And every broker has a different legend for what's provided, what's not. So you can check with Johnny on that. And maybe what I said on the webinar wasn't, I have to go back and listen to what I said there, Bill, but it was probably correct. Jim, if wash sales were wrong in prior years, yeah, it really affects 011, Jim. As I said, the broker just, if they're not reporting 010, how do they report the wash sale deferral from 010? So that means you're going to overpay your taxes for 011 because your January basis is understated. It doesn't have the wash sale deferrals from the prior year. This is part of the cutoff. They phased in these rules for brokers, but they didn't phase them in for you. In fact, they recruited you as a deputy accountant, even though you didn't ask for the job. You were drafted as a deputy accountant. Bill, thanks for all your ethics. Thanks, guys. We appreciate it. There's only one set of rules that means the most to us. It's ethics. And CPAs have a code of ethics. Non-CPAs don't. That's why a couple of our competitors are out there peddling these crazy entity schemes, and you can't even complain about it because they have no code of ethics. They don't even have to be ethical, which I think is outrageous. Some people laughed at a few of my jokes when I talked about brokers some people getting caught with their pants down on not knowing, or accountants not knowing the rules. Bill, he's a CPA. Kudos to Darren. I am a CPA and also a trader and agree totally with Darren about reviewing the 1099B and 8849. There is no way a CPA can just accept the broker's 1099B. And Darren's getting that message out through the top accounting group for CPAs. I don't want to mention the name because some of his work is confidential. John says, do we think IB handles wash sales properly? IB went the extra mile to give an 8949, and they got the top ranking in Barron's through our friend Teresa Carey, who does the report. Well, Darren matched the 8949 to all the other information. Doesn't match. And it doesn't show differences. That's a huge problem. What good is going the extra mile if it's into the danger zone? Yes, Bill, mark-to-market 475 is only for your business traders. You got to qualify, and that's why to check with me. Yes, you can use any software for the extension, Tax Act, TurboTax. And then we'll use our professional software, Lacert. A lot of people like the presentation. We're glad that you did. A couple of people have some long questions about mark-to-market. Better to check in with me. If you have 475, Richard, you're using Form 4797. You don't even have to bother with the 8949. The 1099B is written for the everyman. This is the problem. 1099Bs are for the everyman, the default plain vanilla investor. They are not supposed to deal with tax treatment, facts, circumstances, elections. And that's a good example right there of the apples versus oranges. So if you're a Form 4797 filer, you never fully match the 1099B because you're on a different accounting system. Brokers that will give you a Form 4797, they're not doing you any favors because you may not qualify. You may not have elected it right. They don't know that, so they should not be giving you a Form 4797. That's wrong in our view and asking for trouble. I hope the brokers are listening here. We'll talk to you about all these issues, and we'll talk to you very nicely about them. Tammy, a couple of things we went through quickly on the cap loss carryovers. Well, again, if you have a large capital loss carryover from 011 going into 012, how do you know that unless you have Tradelog? You need Tradelog to show you that. If you have a large capital loss carryover, you need capital gains to use it up. But if you have a Q1 loss and you're a business trader, you don't want to add to the capital loss carryover, so you should consider the 475 mark-to-market accounting election to make it a business ordinary loss. But then the next day for Q2, you want to get back to capital gains to use up your capital loss carryover. No problem. We set up an entity like a husband-wife general partnership or a single-member LLC S-Corp. And then we generate capital gains in that entity to use up your capital loss carryovers, which are not wasted. They don't go away when you elected mark-to-market. The partnership will pass through capital gains to your Schedule D to use up the capital loss carryover. So we have a way, if you have capital losses, you have to talk to me. I will show you how to climb out of the hole with a capital loss ladder, but not dig a bigger hole with a mark-to-market accounting election when you need it. And some of that involves using entities. It can get very nuanced, so read the content and check with me about it. There could be tens of thousands of dollars in taxes on the line from that strategy. Tracy, yes, Tradelog's had some webinars too. We did a great webinar with Tradelog yesterday. We did one last week on our site. So back on our site, again, go to the Tradelog page, and right up top there on our Tradelog page, so you would, I'm over here again on our website, scroll down to Tradelog, click over to Tradelog, and then right there is a webinar we gave yesterday. That was a really good one. Johnny Padgett was there, Darren, myself, and Jason Derbyshire of Tradelog. So definitely start on this page. We get a small commission when you buy Tradelog, but that's not the reason we sell it. We sell it because it's the only program we can sign a tax return with confidence with. And we added the tax knowledge to the program for 10 years. It used to be a co-branded product, but right now it's an independent product from Tradelog. And we did that because we wanted other accountants to buy and use the program and not feel that they had to use, clients had to use GreenTraderTax only. That's why we did that. Tradelog MTM is the old GTT Tradelog. Back to a few questions. We're going late here because I don't know how many times we're going to have chances for all these questions before the 15th, and I want to get them in here. It's only a few more. Yes, Jay, the potential wash sales, they're worthless. They're meaningless. They're going to shock the IRS, but we got to clean those up. There's no such thing as a potential wash sale in your tax return. There either is a wash sale or there isn't. A potential wash sale is when a wash sale is born, but most of them die. Most of them never see the light of day. You break the chain. You absorb them without doing a dynamic analysis based on subsequent events. Wash sale reporting is meaningless. Brokers are doing it on identical positions, only between stocks. You have to do it between stocks and options. Tradelog's the only program that does that for retail traders. And you have to do it across all your accounts, including IRAs. Tradelog's the only one that does that. Hence, our CPAs will only use Tradelog, and that's who we do business with. I had the others come to me and say, Bob, move from the Yankees to the Red Sox. We want your clout. Some big companies, they promised, a good development relationship. And I said, sorry, guys, can't do it. Your program doesn't work right. Okay, Mark, is there any average time you require or need to reconcile 8949? If you want to play Dick Tracy and try to figure it out, you could spend weeks and not figure it out. And I don't want my clients going on a wild goose chase over these vital next few weeks when they should be focused on other issues, I want you to let the dust settle. Let us pressure the brokers to do the right thing and issue corrections. Let us get the IRS to clean up this mess. And let the industry fix this for you so you don't have to fix it all yourself. If you buy Tradelog and you have trader tax status, it's a business expense. So a lot of people said, Bob, I've been listening. I'm filing the extensions. They're with us. So I guess now is a great time to finish up. Darren Neuschwander, my partner at Green NFH LLC, thanks a ton. Can't think of anyone better to be dealing with this mess with together as a partner. And thank you, Johnny Padgett, for being there for us, doing all these years of great trade accounting work for years and years with all the experience, ins and outs. Thank you, Christy Camp, for joining our Tradelog team. You'll be speaking a little bit next week. I'm glad you were here today. And please, everyone, contact us. Mindy's in customer support. She answers the phone. She'll listen carefully. She'll point you in the right direction. She won't sell you anything. She'll get you what you need and you ask for. She'll get you on my schedule right away. And please sign that petition. That's how we pressure the IRS. I wrote them. I gave them blogs. And they see the petition. They know we're working hard. And the petition says, Congress, rein in the IRS. They don't want to be taken to the woodshed. They're going to step up and hopefully do the right thing here. But we got to have a little pressure. So please sign this petition. So thank you all for coming. And we'll see you next week. We'll have another webinar. Stay in touch with our website. There's a lot of blogs that are coming out on this. We don't want to send emails, too many emails. We certainly don't want to be spamming, sending a lot. It is tax season, so forgive us for sending more than normal because there's a lot going on here. So again, stay in touch with the content on this page right here, the cost basis reporting. But in the whole tax center's here. So thank you all. See you next week. Good luck with the taxes.